Hello, and good morning, everybody. I'm your host, Keenan. Welcome to the May 12th, 2022 weekly DXdao Community Call. Today, we're going to chat a bit about Swapper and Carrot campaigns, DX stats, and a bit of casual conversation about Luna UST and general stables losing their pegs and how that could affect DXdao. We have been chatting a bit about that in the pre-call here, but a little bit more context on that in a bit. You can find the agenda here in the Mothership channel. I'm going to drop it here quick. Yeah, excellent. Without further ado, let's hop right into some recaps, starting with governance. Chris, are you ready to take us away here?
Away might be a bit ambitious, but I can give an update on some things we've done in governance the last couple of weeks. The big one is a current live proposal for the DXd buyback program adjustments and clarification. Hopefully those a lot of community members will be familiar with this. This has been discussed on this call, many other discussions in the Discord and the forum. So this one is another extension of the buyback proposal, but more importantly that it does some adjustments in terms of the accounting of the DXD that has been purchased as it's split between the general treasury and the buyback reserve. So hopefully this provides some clarity moving forward and kind of lays out a plan for DXD over the coming months to give some confidence to Dxd token holders and other investors, especially during these turbulent times. But anyway, so that's a proposal that is live on mainnet now. I think it's got 4 more days to pass. There is a corresponding mirror proposal on Gnosis chain for those interested in voting and expressing support for that. That would be great. Outside of that, there's been the usual mix of worker proposals and some farming proposals that have been going on. Lots of proposals more recently, and then the last thing is there is also, and it's kind of cutting in the Treasury discussion. There is, I believe, a proposal for live for to increase the amount of staked ETH through Stakewise, and so that's also on mainnet, and that's also been discussed a bunch in the forum there. And that's kind of updates from the last couple weeks.
Yeah, and I think like that proposal about the buyback extension, right? It calls for some clarification on like the Dxd token model, which I think we needs to be done, and hopefully we can accomplish that as a community over the next month or two here. And like for context, I don't know how much people know about like the history of the bonding curve, right? The original like implementation of the bonding curve, which still exists but is like been paused, is like not minting anything. It had like a buyback reserve, right, which still has about 2,500 ETH in it. And like the design of this like bonding curve was that as the projects, the project like DXdao makes fees, it can send these fees into the buyback reserve, right, which would raise the floor price, like the sell price on the curve for DXD. Now, the way that curve works though with the pre-mint, so there's like 100,000 DXD pre-mint, which is kind of like getting unlocked to the DXdao Treasury over 3 years. I think we're 2 years into that, so it's actually mostly unlocked, right? So most of that is really just like sitting in the DXdao Treasury. The sell price on the curve actually supports the total supply and therefore is actually quite a bit lower than the buy price, right? So it really was kind of just like sitting there, and this like 2,500 ETH is just sort of like sitting there. And I think this buyback program that has existed is basically a switch from saying like, hey, this passive like buyback reserve doesn't really make sense. Like, it should be used actively to buy back this undervalued DXD, or like this kind of below net asset value DXD. And so I think that's like what has happened, and what we still have to answer is like, what is the general Dxd token model though, right? Like, how do fees get delivered to Dxd in terms of value? How does the treasury, the general treasury, which is like supporting product development, like get used and managed kind of beyond Runway for product development? I do think it's very important that like Runway is like the first and foremost purpose of the treasury, but if it's doing well beyond what is needed for Runway, then I think it also makes sense to think about that. But yeah, it should be a good discussion, I think, over the next couple of months, right, Chris? And we'll hopefully get some consensus on what that should be going forward.
Yeah, I mean, despite the current market right now, it does kind of feel like we're at the right time to as these things kind of move forward, and I think it's kind of good in a community like this for people, for us to all be on the same page and to kind of slowly work through these ideas. And, I think, the buyback program, just all of the discussions around it, managing it and kind of how different things to adjust. I think that helps inform where we are now. And then even this discussion about what to do going forward, that we've had over the last, couple weeks and months has kind of brought us all to another realization about okay, these are the things we needed to move going forward. So I think that kind of slow build up of consensus, it's going kind of at the right speed, and I think that's how we can do things going forward of the Dxd Token Model. And so just in terms of the specifics of the proposal and how that works, right there, basically, I think there's a short-term confidence that's given in this immediate buyback proposal, and that's on the accounting between DXD, and it also proposes to basically burn 10,000 DXD. So I think that is a way to give some short-term confidence into DXD, and then there's a medium-term confidence of, okay, when the buyback reserve does deplete, there will be some general support from the general Treasury, or there can be some way of supporting it as long as we have some of those ideas accounted for in terms of runway and funding. And so that's the medium-term confidence. And then the long-term confidence is, okay, over that time, now that we've bought ourselves some time with how of painting a direction of where DXD is going to go, how can we have a larger conversation and really think about where things will go from here? I think it's moving along at a good speed, and regardless of what happens with the market here, this is a discussion that is really irrespective of prices and things going on in the market. It's just how to make a structure that is automated, is fair, is efficient, kind of accomplishes all the different needs from DXdao.
Excellent. Thank you, John and Chris. Just quickly cycling back to a topic we chatted before the call, actually, for those of you listening to the recording, apologies, you might have missed some context, but we were chatting about front-end hacks, namely HoneySwap, and kind of the Limo router. We actually have Serial Saver from Limo. I believe you're the lead developer. Feel free to give an introduction, and maybe we can chat a bit about verifying content hashes and front ends.
Yeah, thank you. Hey guys. Serial Saver, work with my brother, Sid Mead, on the Limo project. I kind of handle all of the engineering work. We're in the process right now of refactoring a bunch of stuff for kind of the core infrastructure. These are quality of life improvements that'll kind of let us support the cross-chain interoperability stuff, wildcards, different types of records. So, redirecting you to your GitHub page, Twitter, URL, things that kind of just fall outside of that normal content hash paradigm that, average users may not leverage, but, this kind of gives them a single point of focus and contact to be able to give someone, a URL and then have it go to wherever they want it to. So working on that, and we're doing some big lift and shift on the underlying cloud infrastructure that runs this, kind of getting it to a point where it's going to be in a better position to scale, not just in terms of request load, but also in terms of multi-region rollout. So we can start actually building something that's more akin to a CDN with better user experience for latency and geographic routing and all of that stuff. And just a little bit about me. My background has been within startups, mostly kind of cloud DevOps, infrastructure engineering, all of that stuff. So it's been fun to work on this project. We're very big proponents of privacy. So, kind of the main selling point for the Limo service is that, we don't log IP addresses. And we're actually kind of, tangential to this discussion on IPFS verification. We're also trying to come up with a way where we can allow any end user to kind of verify the configuration that we say that we're running. We're looking at some different ways of kind of signing stuff and using trusted computing environments so that we can have some sort of attestation where you can actually come in and prove yes, you're not logging IP addresses. I can confirm that. So that's something that's in the works. But yeah, I guess that's kind of like the 30,000 foot view of the project.
Yeah, excellent. Thank you so much, and glad to have you here. There was a couple questions I think John had, if I'm correct. Been a minute now, but I guess kind of the main topic is how or if it is possible to kind of verify content hashes in the front end when using the limo router.
Yeah, so that's a pretty big pickle. We've been aware. We refer to this internally as the limo dilemma, but really it's just content verification and kind of man-in-the-middle mitigations. So we've been aware of this. We've known this is something that's a potential risk, not just for our service, but really in general. I mean, any kind of gateway service kind of suffers from the same trust model. So we've been working with some people at the Ethereum Foundation on coming up with, brainstorming some ways that we could potentially put those attestations in place. We've got some kind of rough sketches of how we think things could work, but part of the dilemma here is that behind the scenes. So the whole, one of the advantages of using Limo or Link, God forbid, but just throwing that out there, is that your client, you don't need any kind of plugin. You don't need MetaMask, anything like this. So this is really good for obviously people that are on mobile and just kind of casual browsers of D websites and stuff. When you start getting into verifying what we send back, I can't really think of a way around not having either there be a plugin, which then basically kind of defeats the purpose of using the service, where because MetaMask or Brave can still do ENS resolution, but you're still depending on Cloudflare to actually do like the underlying, because the way that stuff works largely. And Opera seems to be very similar, but you're pointing to Cloudflare's DNS resolver that it's DNS over HTTPS, and it just will basically send you back a text record with a DNS link value that points to the IPFS hash. And then at that point, your browser, if it's running a bootstrapped IPFS node or something like that, you basically just kind of get transparently proxied to that behind the scenes. Now, when you're talking about Limo as a service, because we do all of that behind the scenes, and kind of the way that it works is that we get the request, we strip out the .limo, so we've got your ENS name or subdomains within an ENS name, and then we do a lookup on that, get that content hash record back, do the multi-codec decoding on it, figure out what type of content hash it is, and then try to send it to the right location, and then proxy that back to the user. There are a couple of projects that we've become aware of that have attempted to solve some of this, and I'll drop this in the mothership text channel. And this was brought to our attention earlier last week, and we talked with the Ethereum Foundation a little bit about this. Richard Moore does a lot of really good library development work for like the Ethers.js project and stuff. And this was kind of an early attempt at basically solving a different kind of problem, but we think that there might be a solution somehow embedded into this that we're trying to reason about. But this project was a way of kind of working around origin isolation within browsers. So if you went to like dweb.link/IPFS/whatever hash, any other IPFS hash that's being served off of that, it's a common origin in terms of the security context of the browser. And so this meseeks application was kind of a way of basically delivering like static content to the browser that would iframe this request and kind of attempt to isolate it at an origin level. That, I guess works if you're using one of these common path-based IPFS gateways. It doesn't necessarily, at least that I'm aware of, solve the problem that we have right now, but it does bring up an interesting point where it may be possible to have like a secure version of Limo, so to speak, where part of that request process is downloading a very small little piece of static content that can be verified, and then you retrieve your stuff through the iframe, and then from there you can kind of independently verify like the headers, because we do send back headers that have the IPFS hashes, but again, you have to trust that that's the hash that you actually requested and not something that's been forged or intercepted or tampered with on the way there. So it's a very difficult problem to solve without some sort of deep specialization on the client side or some sort of iframing solution, but that's still going to require your client to have the ability to then go and actually double check this ENS record, do the decoding, and then find that content hash and verify it with what we sent back. There may be a way to do some of this with checksums or something like that, but really not 100% sure. This is something we plan on focusing on kind of as we get more resources and more time once the migration is wrapped up. But we're definitely interested in feedback from the community. This keeps getting brought up, and it is obviously a concern, and we want to be able to help ameliorate some of the issues surrounding this. So yeah, please, let us know if you have suggestions or ideas, or this is something that you would be interested in working on. This is, a topic that's really near and dear to the Ethereum Foundation's heart. They understand that, these kind of transitional gateways are, a pretty big role within adoption and things like that. And so they really want to take the time to, number one, make sure they're secure, but then also put together a pattern that other people can use to run these gateways too. And so that's, we did open source our version 1 or really 0.1 of this, and we're refactoring all of this, and it will be re-released kind of in a decomposed format. So it's a little easier to reason about what each individual component within the stack actually is responsible for, and how you would deploy that yourself, and documentation and all of that good stuff. So kind of the goal is, if we could potentially roll in some sort of verification that would get open sourced as part of this project, and then hopefully encourage other people to run these secure gateways. But yeah, to reiterate, we've got some ideas, but I think part of this is really going to be crowdsourcing the expertise of other people that may see an angle here that we're not aware of, and we would love to hear from you. So thank you for the time to speak.
It's awesome. And yeah, it's cool that you're thinking about that verification process, right? If there's an ENS name with a content hash set to, some IPFS ID, how do you verify that when you're loading a site that you're actually getting that same build that is being pointed to on the ENS domain? And earlier I was talking about how, as part of the DXdao deployment process, when governance proposals are being made to set the ENS content hash, there's an a build deployed to IPFS, and the dev teams working with DXdao take care to make sure that those builds can be hashed in a reproducible way. And I was saying how that that wasn't that easy at first, actually, but through that governance process, anybody can go and actually look at the GitHub, see the code, pull the, do the build themselves and verify that the IPFS hashes are the same. You could almost even kind of do that after the governance process, right? Just to verify hey, this is the code and whatever. But those, yeah, a little bit separate issue from is what I'm loading even the right IPFS link there, right? So. Lots of problems, but that's awesome that you guys are looking at this.
Yeah, that's interesting you bring up hashing the deployments, so that you can do some verification on that. And I'm just spitballing here. I wonder if there's room for something kind of a new record standard or something like that for putting a signature in for your content hash that then could anything that's got basically an RPC client capability could retrieve that as well, and then verify that as well as the signature that comes back from the gateway service. That might be an easy solution, but it's not. It's a little more involved and cumbersome for development, and then obviously there's a cost associated with updating that record, because it's not something that you can point. You can use a pointer to like IPNS or something.
Yeah, excellent. Thank you very much for your time, Serial. I did notice one more question in the chat just for any audio listeners or recording listeners. Ross asked a question, can we have subdomain URLs in limo, which Sid answered, but I was wondering if you wanted to give an answer to that as well, or just kind of parrot what Sid said in the chat.
Yeah. If you're referring to subdomains off of your main ENS or even subdomains, we do support that. The main problem is just with the TLS certificates. That's going to be automated away very soon, but right now it is manual. So just hop in our Discord. We've got a subdomain certificate request channel, and just drop in there your ENS name, whatever you need to serve for, and we just issue a wildcard certificate. So that'll cover any of the host names under that subdomain for the foreseeable future. But moving forward, we are using some cool features on a reverse proxy that integrates nicely with Let's Encrypt that will give us the ability to do this stuff on demand. And so you won't need to request that anymore. You should, in theory, be able to just go to whatever. So it's app.my.name.ens or something, whatever. And that would actually dynamically provision that certificate for you right there. The only difference is that it wouldn't be a wildcard, but it would actually be a specific common name for that subdomain. But we'll release more information about that when that's out there. But in the meantime, it does work. Just let us know what certificates you need, and I'll get that provisioned for you. And the turnaround time is usually pretty quick, unless it's in the middle of the night, and I won't see it until the morning.
Yeah, excellent. Well, thank you again very much, Serial. Very much so appreciate having you up here. I think we've had you up a couple times in the past, so always welcome.
Yeah, my pleasure. Thanks, guys.
Yeah, thanks again. Excellent, folks. So let's switch over to our next topic here. Wanted to quickly talk about DXstats v1.5. I think we have Venki here in the audience. Let's see if I can get you moved up. There we are. Don't think we're hearing you yet here.
Can you hear me now?
Yes.
Perfect. Cool. So small update on DXstats. We haven't had a lot of work or release done for DXstats. I think when we launched Swapper, we just had a working version of DXstats. We fixed the multi-chain support, and that was it. The last DXstats release was back in September, and primarily because we didn't have a lot of contributors working on Swapper. So now we have a bunch of devs that are contributing to Swapper, and then we kind of use DXstats as a place to onboard new devs during their trial period. So some of the changes that we have done here for DXstats 1.5 are we have a faster load time. It initially took about 15-20 seconds in the current production version, but then the new release will significantly reduce the load time. And then we have added a new page called farming, where you will be able to see all details about different farms that are live on Swapper, and then it tells you like how much the APY is, and if you put in like $1,000, how much of USD equivalent that you will get as APY per day. And then we have added a swap fee next to each pair. And we have a multi-chain dashboard where you could, you just have one page where you will be able to look at different stats across chains for Swapper. Some like how's the total volume is like total TVL across chains look like, so you don't have to switch different chains to look at how the growth has been, and plenty of bug fixes, icons that were missing has been fixed, and so on. So that was DXstats 1.5, and I can also give you a little bit about what we are planning to do in the next upcoming releases. Even though we have reduced the load time the initial load time significantly. We still want to get a bit better. So there will be more updates to improve performance, and there will be more items added around the dashboard or the analytics. We will look at what's the utilization of a certain pool is. We will be looking at what are the daily active wallets that are interacting with Swapper, monthly active wallets, weekly, average volume per transaction. So that, when we look at DXstats, we should be able to gauge the performance of Swapper, basically. So we don't have any of these Google Analytics in place. So the only thing that we have is on-chain analytics. So yes, DXstats should be a place to just go in and look at how good or bad Swapper is performing. So yeah, that's it.
Yeah, excellent. Thanks. And I think the only other thing is that if I'm correct, this release was prepared and is now up to a proposal. Do you know when exactly it will be live and usable?
It is. I think it will be live in about. Today it is ready to boost. So once boosted, 4 days, I think.
Yeah, I'm just looking at it. It's pending boosting now, so we need to have an on-chain transaction to move it to the boosted phase, and then it'll be 3 days.
Gas come down.
Yeah, that's what I was. So probably boosted a couple hours. I don't know what gas is. I don't think gas has been as bad this 157 right now, but
it's been bad since last night when everyone
thought it was a little
thought
wild last night.
Heather was going to implode. Yeah. Yeah, but excellent. Thank you very much, Venki, for chatting some DXstats with us. Cool. So I wanted to quickly highlight some of the Swapper and Carrot reward campaigns that just launched at the start of this call, actually about 46 minutes ago. You probably, let's see if it'll let me copy this here. Of course it won't. Let me direct you to the announcement channel here. This is the Swapper announcement channel, and this is the graphic as well that'll let you ring for carrots. We love that GIF. Here we are. This is the graphic that'll help you kind of keep track. It'll be on the socials and kind of be highlighted in the next day or two as well. But namely, not an incredible change from our previous allocations last month. There shouldn't be any surprises here. We did go over this in the last community call as well. But one thing to note is obviously that there is still GNO and cow carrots and campaigns for the cow with cow GNO pair. Obviously some bonus Swapper allocation as well. That's very exciting. Just heard your mic, Chris. Did you have something to add?
No, sorry.
No, it's okay.
I was actually going to look at my farms now, though. So.
Yeah. Is it the last cow campaigns? Not to the best of my knowledge, although maybe Chris, are you familiar with the plans?
Yeah, so we were chatting with the cow team last week about making a plan after these campaigns, and I think we'll have a call with them early next week so that we can try to arrange some additional cow rewards for the next month.
Yeah, excellent. So not too much to add beyond what we've chatted about last week and before, but if you are LPing on Swapper, staking any campaigns, go switch those over to the new campaigns now, obviously as of 45 minutes ago, and maybe you get a little bit more being early to switching those allocations. So go ahead and do that. The farming continues, says Nathan. Cool. So I think we have Dave here. I did want to give a quick recap on Treasury, and then the next topic will just be broadly Luna and UST, and then kind of how that reflects, how the stablecoin depegging reflects the DXdao Treasury, and like what we can do to protect ourselves from it. So I'm curious. I know you have some construction. If you're able to come up or not today. If so,
maybe or maybe we could talk a little bit about Luna and then talk about Treasury makeup. But I don't know, Dave, if you have some things you want to give first, feel free.
I'm okay either way.
Yeah, I mean, I also need to drop off on the hour. I have another call. But I think the main topics are that luckily DXdao has no exposure to Luna or UST, neither directly nor through yielding protocols. So of course, a lot of yielding protocols, even on Ethereum mainnet for stablecoins, ultimately rely on the anchor yield. So the good news is we don't have any exposure to that, so we're not looking at really any losses at all in regards to that. Of course, the market overall is down, and I think overall DXdao is in a very strong position. We currently have over 10 million US dollars in stablecoins in our treasury. We have some additional stables deployed, LPing and Swapper, and our main stablecoins are actually RAI, USDC, and DAI, which have not been affected at all, of course, by any sort of depeg. Some short volatility, of course, but nothing major or anything of concern. So I think overall, talking about current market conditions, we're looking very good. Of course, I guess we'll be having a larger discussion overall about stables, etc., given the circumstances. But really nothing to worry about right now. I think in hindsight, our conservative approach to both stablecoin diversification over the last year, as well as is not to deploy much capital to some of these risky yielding protocols, has paid off for now. But it's still something we're exploring as well. Of course, you can manage the risk as well. A lot of these protocols are leveraged to, increase yield. And, I think overall, this is not at all affecting DXDAO's discussion to yield with its treasury, but it also is kind of like a fresh reminder that, we should do it well. We should take our time and, deploy the capital, in a sustainable way. I think the market shows what can happen otherwise. And I think John is the expert on the more Luna UST discussion in general right now.
Yeah, and I would say, like, in terms of, maybe some missed opportunities in the past on DeFi yields with the Treasury, like, I think there were sort of like two things that held us back. Like, I think one Dave's already mentioned, right, which is that there is tail risk that we're seeing out here this week in spectacular fashion, right? And when you're, again, trying to primarily secure runway to build products, like, I don't think it's prudent to take on too much tail risk. And then the other thing is DXdao is by design in purpose of decentralized organization, and to do these types of strategies in a trustless way requires quite a bit of work, right? So again, in an environment where development resources are very constrained and the primary purpose is developing products, it's hard to put too much resources into developing trustless treasury management. That said, we have done some cool stuff, and we are talking to some other parties about treasury management, and it's, by all means, there is an interest in getting yield on the treasury and managing it in a good way, but I think being prudent is generally a good idea.
Yeah, and we have a small amount of staked ETH as well, right? And for those who are not aware, there's actually a proposal live to increase our stakewise staked ETH, as well as staking some GNO on Gnosis chain. So we've definitely have been doing some yielding, right? But I think for the more advanced stuff, like John says, it's a work in process. Yeah.
I think in the future, I anticipate more trustless infrastructure for DAO treasury management that I hope maybe, DXdao could even help lead the way on there, which I think we've sort of been doing in the background and hasn't gotten much attention. But that's another topic, maybe for another community call, if we want to get to Luna here before the end.
Too many topics, man. There was the thought in my head that maybe there wouldn't be enough to talk about today, but surely with Luna we could talk forever.
On a week like this, yeah. Do you want to jump into that?
Yeah, let's jump into it. I think this can be a very casual discussion, but I did want to pivot it into kind of what liabilities we have in the DXdao treasury and how we can kind of aim to rectify those.
I think I'd like to start just by talking about what are different stablecoin categories and designs. Because I think, if you're relatively new to this, that sort of is an important framing to understand. And actually, when we were in Amsterdam, I think it was the DeFi Day conference, I saw a talk by Robert, one of the founders of Liquidity, which is the LUSD stablecoin protocol, a very interesting protocol that I recommend people kind of checking out. They do some really cool technical stuff, have been maintaining their peg just fine. And he presented like this categorization that I thought was pretty good. And he had 4 categories, right? So there's, I think everybody's familiar with the fiat-backed stable coins, right? So you have USDC, USDT, at least allegedly are backed by, essentially dollar or equivalent assets, 1-to-1, right? And there's some kind of redemption mechanism there that like allows that peg to stay solid. Then you have collateralized decentralized stablecoins, and he actually breaks this into 2 categories, which I hadn't seen before, right? Like I just kind of like thought of like, oh, you have collateralized stablecoins, and he actually breaks it into exogenous and endogenous collateral, right? So you have MakerDAO, which would be probably the prime example of a collateralized decentralized stablecoin that uses exogenous capital, right? So they started with just ETH, they've diversified into other things, but basically you have the Maker system has, I as stablecoin, MKR is like the governance native token, and the collateral is coming from outside of that system, right? ETH, whatever. And Liquidity actually is another example of this. And then when you talk about the endogenously collateralized ones, that's actually where you see Luna, right? So endogenous would be like, for example, if you take the Maker analogy, it would be like if you were using MKR to back collateralize the stable coin. And so the way the Luna Terra ecosystem works is, right, like Luna is burned to mint UST, and UST can be burned to go back into Luna, right? But like Luna is the native currency of the Terra blockchain, Terra ecosystem, and therefore like this is an endogenously collateralized stable coin, right? And then so the 4th category would be algorithmic, and he liked to just describe these as like purely algorithmic. So there's literally no collateral, right? You're just putting out something and you're trying to maintain the peg just through an algorithm, right? So I think generally have seen algo stables have not worked. Like I like this fun little ditty by Ben Jones here, one of the founders of Optimism. And so to talk more about Luna, so this has been like something that's been criticized like for a while, right? That the fact that you had this endogenously collateralized, some people called it algorithmic stablecoin. We haven't really seen those work particularly well or at all so far in crypto. And in my personal opinion, like it's not necessarily bad that you actually attempt these things. Where I think it got reckless and like irresponsible is when they were doing a lot of like incentives, right, to like lure like basically everybody, retail, whoever, into like Anchor protocol, getting 20% yields when yields across the board were kind of falling. And I think that is sort of like what was pretty irresponsible about this. And it's very divisive and obviously a little crazy because you have a lot of very like name brand reputable VC funds that were backing Luna and are kind of like caught up in this. People are even talking about now how maybe there's like Celsius or some of these yield projects are like maybe going to be affected or, God forbid, even like go bankrupt over something like this. But yeah, I mean, a lot of capital, a lot of people, a lot of the space like kind of caught up in this, and it looks pretty bad to see what is unfolding now, right? And so like what is going on exactly and like why? Like so like I was actually talking to like Ash Egan from Archetype at a conference last weekend, and I was like saying like, oh, this is bad, like there's so much risk in the system right now because you had, I think it was something like $18 billion of 18 billion UST, right? And like what was backing that? And I think that morning, it was like Saturday morning, Luna had kind of fallen a bit. I think market maybe was down overall, and especially following the stock market going down. I think Friday was a bad day in the stock market, especially the growth stocks, and like Luna was just down. And I was like looking at that and talking to people. I was like, look, like Luna market cap's like 23 billion or something, right? And it's like not much higher than the actual UST. So like if this UST wanted to exit, like what's actually backing that, right? And so you had this only slightly higher market cap of Luna, and obviously market caps are just a number on the current price and the supply, and that's not actually how much money you can get out, right? Whereas like a stable coin, allegedly, like that should all be worth $1, right? If people started selling Luna, like there's no way that market cap was going to hold up. They had recently sort of capitulated a bit on this idea of endogenous capital and like brought in Bitcoin, right? So there was a few $1 billion of Bitcoin in the Luna Foundation that was actually this like exogenous collateral that they could use to buy UST. But I mean, if you looked, it was like, okay, you have 3 billion of that, but does that really still support like 18 billion of UST? I think that was questionable. And I mean, beyond that, like what's actually, it's just, I guess, the psychological aspect. A lot of people were talking about, jump capital, these billionaire funds or whatever are going to come in. They're going to like, they'll maintain the peg, they'll defend the peg. We don't have to worry about this, right? Or just like people's just general faith not being shaken. But so, I mean, what we saw play out, right, is the peg started to break. People started to sell UST. Luna market cap continued to go down. Like they deployed the Bitcoin that got used up, right? And we're seeing, I think now is, like Luna is what backstops UST, and as UST moves for the exit, Luna gets hit, right? And so I was looking, I don't have charts up in front of me right now, but I think the Luna liquidity is all but like dead this morning, right? Like I think it's kind of been used up. And so kind of interesting to see, UST actually trading as high as I think it was up at like 70 something cents last night for me, which I mean, I think some people on Twitter and stuff have been calling out saying like, well, why? Like how do people have faith in this? Like when you have 18, I think it was down to like 14 billion or whatever. And like where's the exit, right? Like what's the window there? It's like diminishing Luna market cap. So how is this UST like gonna like stand up? I mean, what are these people thinking? Is it just like some faith or hope that there will be a VC deal or something that comes to the rescue? Although I think even Do Kwon at this point, if you look at his most recent Twitter thread, acknowledges that like they couldn't do a deal to like save the peg, and that the only way this like rectifies itself or even is if like UST is allowed to like can exit, right? And window is small, and so like basically UST is going to have to take like a big hit, right, for this to work out at all, or just the whole thing just collapses and dies, right? And everything like trading ceases and liquidity is just gone, right? I think we're at this point where it either just like completely collapses and is done, or maybe you see like UST actually like bleed out and people sell it, and maybe there's some VCs or something that come in and actually can like salvage it. But I think it would have to be at a more attractive price than 8 billion or something like that. Like I don't think that's feasible for these or attractive for these funds. So that's like my take on it. I don't know if we want to talk more or what, but
maybe just add one thing in terms of the buy pressure on UST, right? That's the question. Like you said, it was at like 60 cents or 70 cents like last night. Like who is buying UST, buying into this system? And it is less people buying, they're not buying UST to hold it. They're buying UST to try to turn it into $1 worth of Luna and then sell that Luna. Because the way that Luna works is you can buy UST, burn it, and you will get $1 of Luna at that point. And so then you can take that Luna and I don't know if you find a greater fool and try to sell it to someone else. And so that's why people are buying UST. But then the question is who and why is there still a market for people buying Luna? Because that doesn't, what's propping up that? And, I think it's still
there is the redemption
financing
mechanism. Yeah. So some people are actually able to get their UST converted to, I don't think it's $1, right? Like I think the redemption rate is maybe like 90 cents or now with I don't know the exact parameters they have set in the mechanism, and you're probably like taking some slippage, whatever, but whoever is able to get their transactions in on those redemptions, like is arbing, able to arb out at like something closer to 90 cents or something, right? So yeah, to those people that are able to arb or have access to that somehow, like,
but that's dependent on people still buying Luna, right? That's like kind of the arb there,
exactly.
is that they
You
can
need to be
sell
able
it
to
to that
dump the
person,
Luna.
yeah, as quick as possible, right? Because then the price is going to go down again. So it's like you want to burn UST, get Luna, dump as quick as possible, and that's why you're seeing this massive, fall. And then of course on the other side, that's why there's more Luna being printed, because every time you burn $1 versus UST, and yeah, that's the other one that Connor has a good point, is if you were shorting Luna, right, the way you short is you borrow against it, and you still have to close your shorts. So you still have to close your shorts. So you still have to acquire the Luna to pay off your short position so that you can kind of take profit from that. So I think that's one. I don't really know. Yeah, if there's like, I don't think anyone.
There might be some
for,
believers, right? Like, I mean, true believers, degens, whatever you want to call them, that are like still thinking that there's some upside there, or like. Yeah.
And I think it's been inflated. Like it was at 325 million tokens like a couple days ago, and I think it's at 25 billion tokens now due to all the issuance. So this is, people say literally like hyperinflationary, 35 billion.
Yeah. And so that arbitrage has been going on this whole week, right? Like the UST to Luna. But yeah, like you said, it depends on people buying Luna, and that looks like it's on its last legs now. Like the liquidity is properly drying up. So, I mean, it's a real sad situation overall. Like a lot of people, I think, like seeing UST as a stable coin, as like a store of value that they were getting yield on, and getting completely wrecked on that. Like it's really it's bad, and like this is kind of looks bad for crypto, I think, overall, and I think it's gonna have some fallout that we haven't really even like fully realized yet.
Yeah. Coming on a little over the top of the hour, I want to wrap up here, but I am curious as to your thought points about regulation and how or if this will kind of accelerate that process, namely you, John, and Chris being in the United States of America.
I mean, it's hard to say. I don't know. I mean, but I think there's definitely politicians and regulators that are going to use this, right, as an example, and are going to like play, use it to play into their narratives. And yeah, it doesn't work in crypto's favor on the regulatory front, that's for sure.
I do think the stablecoins have already been a major topic of discussion, I guess, against regulators. There really hasn't been anything that's put out. But I think stablecoins have always been this really unstoppable force that's going to like mandate that there's some type of legislation or additional regulatory approach from the US government to stablecoins. And I think that's been building over the last year, regardless of how this has happened here. But what this is doing is it's going to then like just set a whole new context for how that discussion about regulating USDC, USDT, and what are the other kind of stable coins out there. This will just be a whole new context around that discussion that is, I think, gonna probably occur in the next year here. But it's the U.S. political system is, that's a whole other ball game too. If you want to look at something that is you can also doom scroll on. So it's difficult to predict how that will play out there. Lots of possibilities, but it just does seem like it's building to a point where it's gonna get the attention and draw some additional regulatory action.
All kinds of scrolling this week. Just kicking in the moving to the outro music. Any kind of final thoughts here on stables, pegging, etc.?
Defending a peg is very hard. It's incredibly, you can just blow through a lot of things, and if you're going to be a stablecoin, that's the whole ballgame in the end. So if you can't really maintain the peg in these times, then, not a stablecoin. And that should be kind of on top of mind of everyone that's using stablecoins, holding stablecoins, or trying to build something that uses them. That really the point of these is to operate in these times of crazy market volatility.
And I'm hopeful that, hopefully, silver lining, there will be more attention put on decentralized stablecoin design and getting some more robust systems in place that we can rely on, right? We'll see.
Yeah, awesome. Thank you very much, gentlemen. I do have a couple of things to call attention to here at the end of the call. First and foremost, the Carrot Awareness Campaign. There's a good recap put up by Sky in the forum. We did chat a bit about it last week. The Carrot Awareness Campaign was a carrot campaign for anyone in East Amsterdam to call attention to the DXdao socials. So if you want a good recap of that initiative, how it went, kind of the learnings, highly recommend that forum thread, which is now in the chat. We chatted about this last week as well. OX Friends is a bot that we implemented here on Discord. You can find the channel here. I'll put another link in the chat, the Discord channel link. It's a channel and a bot that will kind of hook you up with other people that share similar interests to you, hold similar tokens, similar NFTs, similar Discord communities. So it's a fun and interesting way to kind of connect with people from both this server and outside. So highly recommend giving that a shot, experimenting, having some fun with us there in the Make Friends channel. And last but not least, the April month in review, of course, came out late last week. As always, highly recommend taking a look through. Lots of ETH Amsterdam stuff. Super exciting to read through and kind of keep up with DXdao. So would recommend taking a look there as well. Yeah, excellent. That'll do it from me. Thank you very much, everyone, for attending this week. We'll see you next week, same time, same place. Ciao. Thank you very much.
Cheers.
Take care, everyone.